So that's the if, and we know we've got all these supply issues at the moment, and that's partly why we've got this confounding situation of property prices going up amidst a 4 percentage point increase in rates in the past year. But we did have previous predictions that maybe rates would top out at 3.85, 4.1. It seems like they're going to go higher. We're going to get to the point, aren't we, where people just cannot borrow anymore. So is that going to put a dampener on this actually happening? Prices continue to increase until January. Feels less likely now, I guess, after another rate rise.
Yeah, look, you're certainly right. I think interest rates are one of those big ifs at the moment. And yes, it does look like we are going to see interest rates rising a little bit further than maybe some had previously expected. So we saw the Reserve Bank lifting interest rates again this week, and some pretty hawkish commentary from Governor Lowe, really with respect to reaffirming their commitment to bringing inflation down. And I guess seemingly preferring to run the risk of doing a little bit more than a little bit less to really avoid those inflation expectations from de-anchoring. So it certainly looks like we're probably going to get at least one more rate rise in July or August, and there is a possibility that we could get both. So certainly with interest rates having risen further this week and looking set to rise a little bit further from this point, we probably will see the pace of price growth that we've seen over the past few months slowing. And as a result, that would mean that the housing market would be slower to reach that fresh price peak.
Yeah, slower, maybe sort of, I guess it depends as well. If you get a recession, it's a whole new ball game as well. The one that maybe doesn't surprise me, Sydney. I mean, this has been the market over the last 5 or 10 years that has the most extraordinary headlines. You know, garage sells for $1 million sort of thing in some of these affluent Sydney suburbs, and it's bounced back pretty strongly. It's actually set to, well, it's not far off at all previous peaks.
Yeah, Sydney's certainly the market that is leading the upswing at the moment. Now, the Sydney market led the downturn for much of last year, recording a 7.2% peak to trough decline. And now we've seen that Sydney home prices are up just a little over 3% already from their low point recorded in November 2022. So that's 6 consecutive months of price growth for Sydney. And certainly if that pace of growth were to continue, we could see that Sydney would surpass that prior peak by the end of this year, so December 2023. But, you know, as you point to, we do have these ongoing tight supply conditions with respect to an ongoing softer flow of new listings coming to market. Now that's facing into stronger housing demand at the moment, which is likely buoyed by what are very tight rental markets and that strong rebound in net overseas migration. So looking ahead, I think it's all about whether that stronger housing demand environment can hold up against the expected slowing of the economy, the rise in the unemployment rate, and further interest rate rises.
Yeah. All right. Well, look, it's something that's confounded Phil, though, that's for sure, because he says, you know, despite these rate rises, property is a bit of an issue for the Reserve Bank. It continues to shoot up. So we'll see where it heads, but it has been yet another surprising element of the economy right now. Eleanor, Creagh, thanks for your time.
Thank you for having me.